Most traders find themselves failing because they don't have a simple strategy. So in this video, I'm going to show you the simplest break and retest. I mean, it is the simplest break and retest. One fair value gap, one entry, and one retest. Now, the reason traders get this wrong isn't because they can't see a break and retest. They don't know how to differentiate between a good break and retest and a bad break and retest. So in this video, we're going to be going over market structure, fair value gaps, and how you can use order flow to refine all of your break and entry retest. No more guessing, no more gambling, and no more getting frustrated at the wrong retest. So with that being said, let's dive into it.
So here you can see the ES on the 15-minute time frame. And so in this video, we're going to be going over exactly what I said at the start, right? One fair value gap, one entry, and we're going to be using order flow to define all of your trades, right? So what we're going to be specifically going over is we're going to be understanding how to use 15-minute fair value gaps to our advantage, right? And we're going to be understanding key levels, right? What does a key level mean? How to use a key level and how you can manage your emotions around these levels. So here we have one example, right? So we have a 15-minute fair value gap over here, and this was the key level you're looking for a sell-off, right? This is one example we're going to go over. Another example we're going to go over is the same key level, and notice how we're looking at the reaction at key levels to determine who is in control between buyers and sellers. So we're going to be focusing on this sell-off over here, which came at roughly, Thursday at whatever that be, 12:30 p.m. Eastern, and this is going to be the fair value gap. And on Friday, we're going to be looking at the final sell-off you could have taken at this key level. And so we're going to start from Friday's trade and then work backwards. But when you're looking at order flow with footprint charts, right, this is trading view, and this is what I want traders to first start with. But when you come into the markets like this, right, there's very little that any trader can do just by looking at this chart. Because on this chart, we have three places we want to focus on, right? We want to understand what's going on in this region. We want to understand what's going on here. And we also want to know what's going on here upon the retest, right? How can you take advantage of these areas? How can you take advantage of these trades, right? So we're going to be focusing on Friday's price action, right? This would have been the 1st of August, 2025. So we're going to be focusing on these areas over here. And I want traders to understand how a key level works and how to actually trade using order flow. So when price comes into a key level, right, we're looking for price to essentially break below. So we're looking for a break and retest strategy, right? So we're looking for price to break. And then once price is broken, we're looking for some kind of a retest and to take price lower. So we're going to be focusing on the retest here, and we're going to be focusing on the retest here. But the key to the retest is to understand what was going on in the retest over here, right? So this is how we're going to be approaching the markets, right? So you want to approach every market by understanding who is in control of the price. And so we're now going to go over to the ATAS platform. So I get lots of questions about this, and this is the ATAS platform. To give you an introduction to the ATAS platform, I execute and do all of my order flow and volume trading analysis on the ATAS platform. So I recommend the ATAS platform. It is the simplest platform to use if you are looking to trade order flow. And it is the same as TradingView. So you can see the same price action you saw over here on TradingView, right? So I prefer the ATAS platform because it actually gives you the data you need, right? So when we're looking for sell-offs like this, we are looking at TradingView, but TradingView doesn't give us the information we need. So let's just mark up this chart over here using the ATAS platform. So on the ATAS platform, what we're looking for is we're looking for a 15-minute fair value gap, the same way that you would do on TradingView or any other platform. So you mark out you want to find the 15-minute fair value gap, which is just over here, and you mark out the candle before, because this is your key level. And so once you have a key level, there's only two things that can happen at the key level. Key level can either hold to the upside or hold to the downside. And it is your job to read the clues that the market gives you before going long or going short. And that is how trading works in a nutshell. So once you have this area, it can either be an area of support or an area of resistance. Or, as I like to say, it can be an area of demand or an area of supply. And it's your job to read the buyers and the sellers inside of the key levels to determine who is in control of the price. So with that being said, let's go down to the 1-minute time frame and see what we had, right? So we had an initial huge sell-off over here, and we had the opening market sell-off over here. Now let's kind of break this down. So we can see the market rally down approximately from 62 62.95 all the way down to 62.45 area. So very, very large sell-off. So let's quickly go over this sell-off. So we want to understand how price action is behaving inside of the POI or inside of the key level. Is it a supply area? Is it a demand area? And so if there's more supply than there is demand, the market will move lower. If there's more demand than there is supply, the market will move higher. It is your job to determine whether we are at an area of demand or an area of supply. And we do that by understanding the interaction between buyers and sellers. So let's first understand this interaction. This was actually 8:30 a.m. Eastern. This corresponds to the news event we had, NFP. So if we take a look at what was going on inside of this NFP candle, right, notice how we're inside of the POI. So one thing I want to clarify, a lot of questions I get is, do I look at the order flow footprint charts for every minute and am I reading every number, right? Absolutely not. I am reading the order flow and I'm reading the delta and the volume. I'm interested in the delta at key levels, and I want to see how delta is changing at key levels. So quickly, if we go back to the TradingView platform over here, right, this is kind of point number one. This is what we're looking for. We're looking for the initial reaction in. We want to know what was going on in this reaction over here, and then we want to know what was going on in this region, number 2, and then we want to obviously take the trade number 3 once we know supply was in control, once we know sellers are in control, right? So how do we do that? I want traders to understand and study this NFP wick. So what actually happened here? If you go all the way down to the bottom, we see a couple of interesting things, right? What does this mean over here? 112 for 0. So I've made lots of videos on this, but I'm going to keep breaking it down. I'm going to keep hammering. I'm going to keep banging the drum. 112 is the bid, and 0 in this case is the ask. So you have the bid, which is aggressive sellers, and you have the ask, which is aggressive buyers. Now, what you want to understand with this is that there's significantly more aggressive sellers than there are aggressive buyers hitting the bid, right? So what that means from a trading perspective, from a trader's perspective, if you're looking at this live, is you want to look at this price. So this was exactly 6,300 on ES, right? 6,300 on ES. There were more aggressive sellers than aggressive buyers, meaning the sellers were going in at market prices, right? 6,300, right? Whatever it was, 62.99, 63.01, right? We see a large amount of selling volume hitting the bid. Now, common sense shows us that we had a lot of these sellers, but none of them were really rewarded, right? Because we saw the market moving higher. We actually saw aggressive buyers stepping in. So we had aggressive sellers, which switched to aggressive buyers. But what I want traders to understand is that this here was 112 for 0. This was 112 for 0. This was NFP. So what we're seeing over here is we are seeing a lot of aggressive sellers failing to break below the level. So this intrinsically shows us that they're passive buyers that are at this level. So over here we have passive buyers. Now quickly, what are passive buyers, right? What do passive buyers represent? So I'm just going to write here passive buyers. So these passive buyers are active, they drive price higher, right? So passive buyers are going in the market with limit orders, right? So what are limit orders? So there's aggressive participants or market orders, and then there's limit orders. So if you go to the ATES platform or any order flow delta footprint charts, these are showing you market orders. They're hitting the bid. They are trying to drive price lower. In this case, the aggressive sellers, right? All these sellers over here fail, and the market moves higher. This shows us that there are aggressive sellers failing. Passive buyers are present. So this zone is being held up by buyers. So these buyers are present. Okay, now let's go to the ATES platform and understand what was going on over here. So we see aggressive buyers over here, aggressive buyers all the way at the top, right? And now from here, the market opens at this time. So I don't take any trades before 9:30 a.m. Eastern. But if you're looking at this over here, you want to understand a couple of things, right? This is the same exact phenomenon. So what you're looking at is a phenomenon of a change in state of delivery. Now, this is an ICT concept, which I've not stolen from ICT. I'm using his terminology so that traders can understand what a CISD actually represents. A CISD isn't a pattern you see on the charts, right? When the market changes its state of delivery, what is really going on is an absorption, in this case, of buyers to sellers, right? Or sellers to buyers. When you're looking for a change in state of delivery, you want to see a change from demand to supply. So what do I mean by that? So initially what was going on is that we had, let me just clear the charts up a little bit. We had a lot of demand over here, right? We saw these aggressive sellers failing, which means there was demand for higher prices, right? Let's kind of get this straight. Now from here, if we continue to play price on a little bit, right? Let me just move this over here. So when we play price on, what was going on is this. So we're going to be studying the buyers and sellers in this region, right? So we want to see what was going on here to cause this break. So let's kind of bring the charts up side by side. So we're looking for the interactions over here between buyers and sellers, right? So here we are. Let's get this up. So very aggressive move to the upside to start the session, and we actually had a lot of buyers over here, sellers over here. Aggressive sellers, negative delta, right? So this is why I love the ATAS platform, right? We see negative delta, right? 723 for 247, significantly more aggressive sellers, right? We see a 0 print over here, and we see an initial drive up just before the market opens. Market opened over here, wiping out all of the passive buyers that were here, and we broke the level. We broke that level. So if we go all the way back to NFP, at NFP, this was acting as an area of demand. Again, why was it an area of demand? The reason it's an area of demand, and I want traders to understand, the reason it is an area of demand is because the market is not rewarding the aggressive sellers, right? Passive buy limit orders are present, making this a demand area, right? That is what you saw over here. This was a demand area. These passive buyers that were previously here have now failed. Passive buyers have failed in this region. So it is your job to understand what was going on upon the rejection over here, this initial retest. What was going on? Interesting. Let's go back to the ATAS platform, because the ATAS platform, or the order flow delta footprint charts, will give you the answers that you are looking for. So let's kind of go to market open. So at market open, we see a couple of big red candles, right? So we see a huge red candle wiping out any passive buyers in this region. Now that we've broken below the level, we can start to shift our bias from bullish to bearish, because this POI that was acting as a demand area has now slowly switched to a supply area. And here is the confirmation, or the first confirmation, right? When you see a big break to the downside, right, you want to look at the initial reject candles over here, the retest candles before the market really melted. So we're going to be focusing here, and also here as well. Let's start here. So this candle over here corresponds to this green candle over here, this kind of doji retest before this break to the downside. So what you can see, I want you to focus on a couple of things, right? 0 for 29, 0 for 54, 90 for 220, right? So what you're seeing is you're seeing a lot of positive delta, you're seeing a lot of blue delta. You are seeing the ask volume being higher than the bid volume. So what that means is that there's more aggressive buyers than sellers, but these aggressive buyers have not been rewarded. Okay, now this is what makes a supply area. This is what makes a fair value gap actually work. So you saw aggressive buyers up here failing, and you see aggressive buyers over here failing. So essentially what's going on over here is a couple of things. Here we saw those passive buy, if I spell this right, here we saw those passive buyers fail, right? We saw the passive buyers fail, and those passive buyers failed over here when we saw the market breaking below the level. That is step one. Step two is we saw aggressive buyers, if I can spell that, aggressive buyers also failed. So when you're looking at a POI or a fair value gap, you need to understand this is what really, this is the ticking, this is the inner workings inside of anything you're looking at in the markets. So what we see over here, if I bring the ATAS next to it, is we can see a lot of aggressive buyers failing to break above the level, right? We see one break, two break, and we also have a slight retest. So when we look at the retest in this particular region, right, we're looking at a lot of aggressive buyers again, and then the market really melts off. So if you are trading footprint charts, or if you're trading kind of fair value gaps nakedly by themselves, maybe perhaps integrate this into your trading, right? So I like to use slightly wider stop losses because we do have a 1 minute fair value gap over here. But when I see the initial rejection like this, I would feel comfortable entering here and having my stop loss above this level, okay? And for me, targeting at least a 2 risk 1.5 or 2R risk reward would be sound for this trade, right? So if I just let this trade play out, what we're seeing is we're seeing a follow through of those sellers that are in control. Now, one more time. Why do I know sellers are in control? So the reason I know sellers are in control in and around this region is because I can see a huge amount of blue delta here and here, but I don't see a follow through of buyers. That way, the aggressive buyers have failed and the previous passive buyers have failed. So if all these buyers are failing, common sense tells me I want to be selling. So that is the first kind of trade and I guess case study I wanted to go over, right? I wanted traders to understand how the market works in terms of buyers and sellers, right? So the reason this trade was essentially valid is because of two main reasons. We saw passive buyers failing, that's the first reason, and over here we saw aggressive buyers failing, right? So we saw two types of buyers and the only types of buyers that are failing. So if these buyers have failed and these buyers have failed, it shows us that sellers are in control. This is a supply area. Supply is in control because sellers are in control, right? And that's why the market moved down, okay? Now, what's interesting about this is that these key levels often will hold and give you rejections again. And that's what we're going to be studying now, right? So again, patience is important. And this is what I preach to traders about psychology. If you have a level on the charts, you want to wait for the market to hit that level, right? So you have to be comfortable sitting through this, right? This is the price action that burns me sometimes. It used to burn me a lot. This is the price action you want to avoid, right? So this is all of this over here in red is what you want to avoid. The reason why you want to avoid this price action is because you want to trade at key levels. You want to trade at supply areas or demand areas. You want to trade at 15-minute fair value gaps. And so when price comes into this area, we're going to quickly go through these retests over here. So we had a couple of retests over here, and I want to go through both of them. So if you traded the second retest somewhere around here, you could have sold here, stop loss above the initial reject over here, and you want to be targeting a fair value gap or a piece of liquidity down here. So this trade really ran off, right? So this here was a very, very large trade you could have taken, right? Price really sold off on Friday. So why did the market sell off, and how do you know that the markets were going to sell off? You want to know what's going on here, and you definitely want to know what's going on here. So these two circled regions are what we're going to look for, right? We're going to look at this. Again, what makes these two areas attractive to us as traders? So let's just get this up. So if we take a look at the second rejections over here, if I just take the A-test platform, we're going to be studying what was going on upon this rejection, and then of course this rejection. So this rejection is the most interesting one, right? So we see that 3-bar candle, 1, 2, 3, and what we're seeing is we're seeing blue delta switch to red delta. So we see a big sell-off candle after having two big green candles with positive delta. And this is the thing I want to draw to traders' attention. Now, 65, 186, right? That is roughly a 3x difference between the ask and the bid, right? So you see a huge amount of aggressive buyers trying to break the level. They didn't really win, right? A lot of these sellers over, in fact, all of the buyers over here, were trapped, right? These were trapped buyers. Now, 106 for 224, 0 for 2, right? We're looking for a finished auction, right? I've been through this in many videos. A finished auction is where you see a 0 on one side. So seeing a 0 on one side essentially means that there's more, obviously more in this case, aggressive buyers and sellers. That's one reason to take a short. But the second reason is when you see a finished auction, it shows you that there's no trading at that level. It's showing you the market is going to reverse, right? Or there's a higher likelihood of the market going to reverse, right? So this is what I use as a massive confluence to my trading, and I recommend using it for any type of strategy you have, right? Confirm your levels, confirm any indicators you're using, confirm your fair value gaps, confirm your support and resistance with order flow and finished auctions, right? Finished auctions are the lifeblood to my trading essentially, right? When I see a 0, there's two ways to interpret this. So this is the price 62.96.5, 62.97, right? So you can confidently place a stop loss above at 62.97. The reason why I'm saying that is because at 62.97 there has been a the auction there has been wiped out, right? There's zero aggressive buyers, which shows you that the buyers and sellers themselves are no longer interested in trading at those prices. Now, once you can establish that with the fact that buyers are trapped, there's only one other option, is to sell, right? So simplification of your strategy using order flow is what you want to do, right? So that's essentially the sell-off you could have taken. So that brings us to kind of Friday's trades, you know, very aggressive sell-offs. So let's kind of clear the charts again. Okay, let's just go to Thursday now. Now, Thursday was interesting because Thursday actually was derived from Tuesday's level, right? Tuesday was probably the best trade I personally took as well from the week. And we're just going to be breaking it down. So on Tuesday, how did I frame this trade, right? So what are you looking for when you're framing a trade like this, a sell-off? So let's just go to Tuesday, right? Because it's the same level that played on Thursday. So let's go to Tuesday and understand. So I had a fair value gap from Monday. There's the fair value gap from Monday. That's going to be my target. So my trading is as simple as waiting for key levels, seeing the reaction at key levels, and then trading the order flow. So it's triple X, right? Where to trade from, what to look for, and why you're looking for it. Where, what, why. You need to have a key level, you need to wait for price to hit the key level, and you need to validate your key level to see who is in control. Is buyers in control? Is sellers in control? That's all you need to do. So this trade was essentially waiting, retest, target, right? That's all it was. Wait, enter, exit. That's all you're doing, right? So let's kind of break this down even further. So whoa. So let's kind of break this down. Now, it's the same exact concept from Friday, right? So we're going to go through it faster. We want to know what's going on here. So we have initially the hold, break, and then we look for the retest inside of this area to take price short. So how did I know price is going to go lower, right? What gives you the indication? Let's kind of break this down. And we're going to go to our trusted friend, the ATAS platform. So on the ATAS platform, let's break this down again, right? So on the ATAS 15-minute. So the reason I like using the ATAS platform is that it's the same as TradingView, but it gives you the information you actually need to put on a trade. So if we break this down, let's bring this over here. So on the ATAS platform, we have the same 15-minute fair value gap, right? So this is the same point of interest over here, and we are going to be breaking down what happened inside, right? So this is the goal of this particular session, right? This is the goal of the video. So if we go down to the 5-minute and we go back and see what happened on that particular trade, right? So let's break this down. So when price comes into this key level over here, right? Price enters the key level and we want to know what was going on, right? We want to see what was going on, okay? So again, we see a lot of negative delta, right? 5 for 0, 117 for 14, 79 for 17, right? So we see a lot of aggressive sellers that were unable to initially break the zone. So who is in control of the zone, right? I want you to kind of break this down, right? You come into a fair value gap, you see more aggressive sellers than buyers. This shows us that there's passive buyers over here. So this shows us that the zone is being controlled by buyers. It is a demand area or a demand zone. We don't want to be selling at this point. Now from here, we see the market opening and we see a lot of aggressive sellers, which actually were rewarded with follow through. Right, so we see a follow through, we see price really melting below the zone. What does that tell me? So as a trader, that tells me that there's more, yes, there's more aggressive buyers and sellers, but the aggressive sellers, there's more aggressive sellers than buyers, but now we see price is rewarding the sellers, right? Previously, these sellers weren't rewarded. Now they have been rewarded. So it shows me my bias wants to be switching from bullish to bearish as we see the follow through with negative delta. More aggressive sellers than aggressive buyers. Now here's the kicker. This is what I want traders to understand. Look at how the market was behaving just above this level, right? And just in the level as well. So we want to be focusing on the retest area. So the retest area is what's very important to understand, right? So this retest area is essentially the gray box, right? We want to see what was going on, right? So why was it valid to take a short position just below the level, right? When you saw this big kind of red candle over here, stop loss above this level, and we're simply looking to target the following level down here, right? Why did you get the follow through with this trade over here? What gave you the confirmation? So we want to understand what was going on inside of this level. What was going on, right? What was going on? Let's break this down. So can you see over here, let's bring TradingView next to the A-test platform, right? This is my favorite exercise in the world. I want all the traders to understand this, right? So when you see this is showing you essentially the break and the retest to take price lower. And the reason this worked out is because I want you to pay attention to, again, the fact that aggressive buyers were not getting their way. Is this a supply zone or a demand zone? Well, it's a supply zone. There was more supply than there was demand because aggressive buyers failed to break above the level, right? In fact, we had aggressive buyers here, blue delta, blue delta. Now, what really gave it away to me was this, right? I want traders to understand. We had a green candle. Okay, doesn't mean much. We had 284 for 513. That is roughly a 2x difference. There were double the amount of aggressive buyers than there were aggressive sellers. The ask was significantly bigger than the bid. That means that buyers were aggressive. Okay, we also had a 0 at the top, right? 0 for 83. 83 market participants hitting the ask. But a lot of these aggressive buyers failed here. We saw a break below the level. So what does that show you about all of the aggressive buyers in this zone, especially here? So this green candle corresponds to this green candle over here, or this green candle over here. It's showing you the retest of aggressive buyers has been unsuccessful. An unsuccessful retest of the buyers trying to break price above the zone means that sellers are in control. You want to take price down. And so that is the reason you could have taken a sell from this position, right? So it's as simple as that. And I don't want to trivialize my strategy, but it's really as simple as waiting for price to hit a fair value gap, waiting for price to enter inside of the fair value gap, and understanding the interaction between buyers and sellers, right? So the only reason a fair value gap holds is because, in this case, sellers were in control, right? That's it. Sellers were in control, and the entire strategy is trading from this fair value gap to this fair value gap, right? That's all you're waiting for. That's it. Now, to finish off this video, I just want to show you the power of essentially these key levels, because when you know that sellers are in control, you can look for buying and selling pressure, or buyers and sellers again in that level, right? So this was Tuesday's level, and you can see the market actually held this level on Thursday as well. So the same thing happened here. Sellers were in control at this level, causing price to go lower. And so this is the only reason the market sells off, right? The only reason the market sells off is because of a break and retest where buyers fail to break above the level.